Hi everybody, Marco Carvalho here from businesscreditblogger.com. Today's video we're going to talk about how to get a new business loan for your company. So by the end of this video presentation, you're going to learn exactly who is a business term loan best for. If you qualify for a business term loan, we're going to actually get into what exactly the underwriters look at for a business term loan application and how to get approved. We're going to talk about the uses of a business term loan. So by the time you're done watching this video, you'll know exactly if you should apply for a business term loan and where to apply using our business term loan program. So let's get started. First and foremost, let's talk about why is a business term loan, why may it be best for you if you're a startup or existing business, or you're looking to purchase a business or buy a franchise. Obviously, you get a lump sum cash injection into the business. So if you need a lump sum of money, that's what a business loan is ideal for. You can pay back with regular monthly payments. These are fixed payments, and it's over a set period of time. The reason why a business term loan may be beneficial is because many business term loans go anywhere from 2 to even 25 years repayment. So that allows you to have a much smaller payment and gives you much more time to pay back the business loan. So is a business term loan right for you? And this is what's really important, because if you're an existing business, then you definitely should consider a business term loan because you have a track record. Those are what banks look for. If you have 2 years in business or more, that's great. If you are looking to buy an existing business, that's another ideal candidate for a business term loan, because the existing business has a track record. It has financials, or it has tax returns. It can show profitability. Or also, if you're looking to purchase a franchise is really beneficial because you have the support of a major corporation that has a proven system of success. That's why it's a franchise opportunity. So, but what if you're a standalone startup? What if you're looking to start your own business from the ground up with no proven track record? What I strongly suggest is to look for maybe a personal loan rather than a traditional business loan. And why is that? Because at the end of the day, it's all about risk. Banks like to see businesses with 2 or more years in history, 2 or more years in business, or like franchises. If you're looking to buy a franchise and start one, at least you have that proven model. You have the support of already a major corporation that you're buying into as far as the franchise goes. So that track record is what the banks like to see. This is traditional business loans. So that's why a personal loan for a business would be ideal if you're a standalone startup, because really they look at 2 things. They look at your personal credit, and they look at your personal income when it comes to personal loans. You'll see at the bottom of this presentation, businesscreditbuilders.org/business-loans for more information. And we're going to talk about more about qualifications and what documents you need to qualify for our BTL program. So some of the ways you can use the funds that you get from a business term loan: buy a franchise, expand your business, buy an existing business, working capital, equipment, refinance any existing debt you may have. This is also ideal if you own a business, you're looking to buy a building for your business or land to build on for your business. It has to be business related. Or you're looking to have improvements on your existing business. You'll see all these other, like if you're trying to establish build a bigger parking lot for your structure. Those are ways to use the funds for a business term loan, construction of new facilities if you're looking to expand, etc. Now, as far as the business term loan overview, money-wise, you're looking at about $50 to $5 million in funding. That's the range for business term loans with traditional banks and even our SBA-approved lenders. And we're going to get into why under $50,000, you don't want to look at a business term loan, because banks are simply not issuing microloans. Some specialty ones are, but 50 to 5 million is what you want to look for. Low fixed monthly payments. Interest rates start at 6%. That's what business term loans are really attractive, because your rates are much smaller than if you're going with like credit cards, etc. Now, repayment terms 2 to 25 years, and the funding timeline though is a little bit different. Typically, if you go the traditional route, if you go on your own, it could take 2-3 months. We've seen some cases where it took people 6 months to get a business loan through the SBA. The beauty of it with our streamlined BTL process, you're looking about 8 to 12 weeks for a business term loan. That's our turnaround time, so it's a much faster process. Now let's talk about why is it hard to secure a traditional business loan under $50,000. If, as you know, a $50,000 loan, as far as traditional banks goes, it's going to be the same. It's all about costs. It's the same administrative underwriting cost to service a $250,000 loan, but they get a lower return. So at the end of the day, banks want to make money, obviously. So for them to doing loans under $50,000, they're most likely going to turn you down. So if you apply for a business loan at a bank, or even a credit union or community bank under $50,000, more than likely they'll turn you down for that small loan, especially if you're a startup. So you do have some options though. If you're looking for under $50,000, like again, consider a personal loan for business if you're a standalone startup. The rates for our personal loan programs are around 7 to 12%, with repayment up to 7 years, 2 to 7 years. Another option is going through microloans. I'm sure you may have heard of micro lenders out there. There's like Kiva. There's the thing with one of the major micro lenders. We got this off their website. Is their average interest rates on their microloans, and these are loans are like maybe $10,000, $15,000, $20,000, but they're small micro business loans. 13 to up to 34% interest rate, and repayment is 6 months to 2 years. So you have a shorter loan term, and you have much higher interest rates. So that's why I kind of tend to favor a personal loan for business if you're under 50K. Okay, so that's just my input on that. Feel free to do your due diligence on micro lenders if you're looking for under 50K. What do underwriters really look at on a business tax return? Now this is really huge because I want to share with you how you can kind of look at if you're going to be able to qualify for a business term loan or have an idea of how much you can qualify for. And this is just one of the major calculators. Other factors they look at, obviously, but this is one key indicator that underwriters will look at when they're determining if your business can support a loan. So at the end of the day, when they look at your business tax returns, and you can look at your business tax returns right away, they look at the net operating income. So if you look at your net income, the other things you want to factor back in there is if you have interest, depreciation, and salaries, you can add those back into your net operating income. Okay, so once you have that number for your annual net operating income, then what they do is they divide that into the debt service, your total debt service. Now, to make it really easy, obviously they look at all your debts as a business, not just the business loan you're looking to acquire, but they take all your debt service, monthly payments, interest, annualized, and then that comes with what's called a debt service coverage ratio. But to make things really, really simple, we're going to kind of do an example here on the next slide on taking your net operating income, total debt service for a business loan, and what's the number that comes up with, which is the DSCR. Now, for banks, they want that number to be about it's called your debt service coverage ratio. It needs to be over 1.25. That basically means that there's enough cash flow to service that debt. So if your net operating income is what that is, that's income is available for debt service. So obviously you want your tax returns on your business, you take deductions, etc. But the things you can put back into that net operating income is like interest, depreciation, etc. That's where they come up with that net operating income number. Debt service is the amount of cash that you need to pay interest and principal on the business loan. And that's annualized, okay? So they take that into account. So they take net operating income, divide that into total debt service, and that's where you come up with this number, debt service coverage ratio. So let's kind of give you an example how that works. Let's say you're wanting to get a loan for $250,000 with let's say the annual interest rate that the bank's offering is 8%. And this is what underwriters are going to do. They're going to look at the numbers and see if your business can support the type of loan and rate that they're projecting for you. And let's say the term is for 10 years. So your principal and interest payment on the loan is going to be about $3,033 per month over the course of the term. It's amortized. So you're looking at about $36,396 a year to service that particular debt, just that particular business loan. And let's say your net operating income is $125,000, so we divide that into 36,396, and that comes up with your DSCR number as 3.43. So that shows that you're well over 1.25. It looks really good. So obviously, your business has enough cash flow to service that business loan. Other things they look at, of course, they look at your personal credit. They're gonna obviously look at the tax returns. That's where they come up with these numbers. But I just wanted to give you that little that insight, so you can have an idea. Because many times business owners come to us and they say, "Well, I want a traditional business line of credit, or I want a traditional business loan for my business." But at the end of the day, when we look at the numbers, they do their tax returns, they wrote off a great deal, and there's very left over on the net, and that's why they have to go with like maybe business credit card funding, or have to go with a personal loan, etc. So this is important for you to realize your numbers as a business, so you can see that's what banks want to look at. Can your company service that debt? Now, also keep in mind though, if the net income doesn't support the business loan, they also factor in personal income too to help support that loan. So that's why they look at your personal tax returns, they look at business tax returns, and so if you could combine those two and that allows you to service the debt, then that's another way you can qualify too. So and it's still a business loan. If your net on the business and the personal can support it, then you're good to go. Okay, so now keep in mind though, there are some restrictions when you're applying for business term loans. Most banks, especially SBA, they don't allow you to, they don't do restrictions as if you're a real estate investment company, you're trying to get a traditional business loan, but it's for investment purposes, it's not for the business. So you have to make sure that if you're going to buy a commercial building, that it's for the business. It's not for just investing, and you're not going to be operating a company there. If you're looking at it for real estate investing, be sure to check out our site on realestatecredit.org. We have funding programs there. That's realestatecredit.org. Companies involved in, like if you're doing oil and drilling, those type of speculative activities, you can't apply for a business term loan. Dealers of rare coins and stamps. Any companies involved in lending activities, if you're a funding company, finance company, multi-level marketing companies, gambling, any charitable and nonprofit organizations. Okay, so let's say you've done some numbers, you have great personal credit. Let's say you have a 670, 680 credit score minimum, and let's say you've looked at your business net income, and you have some sufficient income in there, and you have a good idea that you could qualify for a business term loan, and you want to start the pre-qualification process with us. Or let's say you want to do it on your own. This is the challenge that you're going to face. Is determining which banks closes loans and the amount of the funding that your business needs. You have to find that bank. Okay. Also, if you want to go through an SBA loan, there's the 7A and the 504. There's over 3,000 banks and credit unions nationwide that are approved to do SBA loans. But remember, simply because they do SBA loans, the bank itself, has to have a taste for the type of industry, the location you're at. You have to determine which bank should I apply with for this particular business term loan, and how should I package my my loan? How should I, what documents do I need? What are the banks looking for? So those are questions you're going to have to answer, and also which bank is familiar with your industry, how it operates. Some specific banks have a knack or have a niche where they service a specific type of industry, and they favor it as far as issuing loans to companies that are in a specific industry, and there's some banks that stay away from certain types of industries. So you have to identify that. What is the best way to submit your loan package for the fastest approval? Like I told you, this is a long process, but that's where we come in with our BTL loan process. That's where the beauty of it is we speed that entire process up of you trying to determine which bank should you get your business term loan, or which can you get approved for. We work with community banks, SBA approved lenders, SBA preferred lenders, credit unions, but more importantly, we determine which bank to place you with that will accept your loan based on your industry, geographic location, the amount that you're looking for, and how to properly package your loan package to get the fastest approval. That's why our process is about 8 to 12 weeks. So it's a much faster process getting a business term loan through our program than obviously going it on your own. Of course, you can go on your own. But if you want to speed it up and you don't want the headaches, or you don't want to them keep pulling your credit to see where you can get approved, That's the beauty of our program. More importantly, we allow you to do a pre-qualification with us where you submit your tri-merge report, your bank statements, business tax returns, or if you're looking to buy a franchise, etc. We will do the review for you, absolutely free, to see if we can get you the deal, get you the loan that you're looking for. So you get that support, and once you come aboard, you get your own processor assigned to you. They hold your hand through the whole process. So that's the beauty of our business term loan program. Now, what do you need to pre-qualify for a business term loan? You need your tri-merge credit report. That's the first thing you need. Now, when you order your own tri-merge report, it's a soft inquiry. It's not a hard inquiry, so it does not hurt your credit to see if you pre-qualify for a business term loan. So you go to businessfundingengine.procredit.com. This is the provider we suggest. The reason why is because it provides you all 3 credit reports in one file. It provides all 3 credit scores for you, and you can download it in PDF format, and they only charge you $1 for the initial sign up. Then after 9 days, they have a $27 a month service, but you can cancel it. It's a great product, though. You might want to check into that. But that's a great way for you to get us the information we need. You don't want us to supply, we do accept other reports, but the problem we run into is many people supply us only 1 credit report. And sometimes some people might submit 1 report with 1 score, and that doesn't allow us to do a full assessment, a full accurate projection, because obviously credit reports are different, scores are different. So we have to look at all 3 reports and scores to give you an accurate assessment and projection if we can do your business term loan. 3 years personal tax returns, that you're going to provide that, and completed our business term loan application. So those are the 3 things you're going to need starting off. Okay, but there's additional documents needed, and this is just for pre-qualification. Okay, this saves you a lot of time, and this saves you that hard inquiry as well, because we're going to do a full assessment to determine what business term loan program you can get, what business term loan you can get, SBA, 7A, 504, or a traditional bank loan. Now, if you're an existing business, then we need to see 3 years business tax returns, or 2 years business tax returns if you're 2 years in business. 6 months most recent business bank statements. That's all we need. So we need the first 3 things: personal tri-merge report, your personal tax returns, and then of course we need your 3 years business tax returns and 6 months most recent bank statements. If you're buying a business, then this is the additional docs we need. Let's go back to this. We still need these first 3 things, right? But then now we need the previous 2 years federal tax returns of the business you're buying. Now, sometimes it's tough for a business owner if you're looking to buy a business that they don't want to supply their returns, but you're going to want to see that because you want to see how profitable the business is, if the numbers are accurate that they're telling you. We need to see the asking price. What are they asking for the sale of the business? What type of inventory does the business have? What type of assets are you buying that the business currently owns? And the proposed bill of sale, including terms of the sale. So that's what we need, okay? Now, let's say you're buying a franchise. If you're buying a franchise, it's a startup, but it's a franchise that has a proven system. So we need those first 3 things. I'll go back again: personal tri-merge report, 3 years personal tax returns, and your completed business term loan application. And the only additional thing we need if you purchase a franchise is a resume. We'd like you to have industry experience in the franchise that you're getting into. So let's say you're buying a Subway franchise, and let's say you have experience in the restaurant industry or the service industry. That's a good thing. Whereas if you have no experience in a specific industry, you're buying into a franchise, that could be overlooked, but it's much more depending on other experience that you have. But we like to see experience in the industry that you're in, that you're getting into. Now, to start the pre-qualification, you go to businesscreditbuilders.org/pre-qualification. So you're going to fill out that information, upload your tri-merge report, and select the business term loan item when it asks which loan program are you interested in. Because what we're going to do is we're going to send you the business term loan application along with the additional documents that you need for a pre-qual. It takes us 24 to 48 hours to give you a review once you submit the business term loan application and all the other information that we just covered here. Okay? And feel free, you can give us a call if you have some questions, 517-518-8847. Now, during the qualification process, we're going to determine what type of loan will be best for you, whether it's SBA, whether it's a traditional business loan, and more importantly, which bank we want to place you with, and then we'll give you some projections. From there, we send you out an agreement to move forward, and it's a really streamlined process. 8 to 12 weeks is the turnaround time for you to receive your funds. So to start the BTL pre-qualification process, you're going to go to businesscreditbuilders.org/pre-qualification. Thank you very much for listening to this presentation. If you like this information, be sure to click like and subscribe to our video channel. We're going to always be providing information for you on a regular basis on funding for your business, startup, or real estate investment company. This will also teach you new strategies on how to maximize your funding potential while building your business credit. So with that, make it a great day. Be sure to check out our blog out, businesscreditblogger.com. Make it a great day. We'll talk to you real soon.